And joining us now as we take a look at what is happening in soybeans. Pleased to have with us today our good friend Mac Marshall with the United Soybean Board. Mac, always good to catch up with you, buddy. I hope you're doing well.
Doing just fine, Jesse. It's great to see you again. We're getting a little closer to planting season now than the last time we talked. So that's exciting. You're starting to see tractors moving around and farmers getting ready throughout many parts of the country.
Yeah, definitely. And I know, some areas getting going already, and other areas close. Some areas, especially across the northern plains, going to be a little bit yet, but it is that time of year. It's that busy time of year and that exciting time of year as we start with a new crop in the ground. And of course, USDA kind of gives us that starting point, that base building block at the end of March every year. The prospective plantings report came out. What is your take on the numbers we saw for soybeans? That acreage number a bit lower than a lot of analysts expected. Mac, what did you make of the USDA numbers?
Yeah, towards the lower end of the range, and I think it's always an open question. Are you looking at it, and this is why you often see two polls on these reports? Are you looking at it for where you think the number is actually going to wind up when everybody's surveyed post plant and how things actually went in the ground, or are you trying to estimate what the report's going to say? Because those are two different things. Naturally, whatever unfolds at the end of March when we get that, and I like the way you put it, as a building block for the data that's evaluating market conditions and what actually goes in the ground. There's so much potential for that to move between where we are now and when farmers actually get out in the fields. And I think that's true in any given year. Last year, for example, when plantings came out, we were looking at 91 million acres of soy. And of course, that didn't come to fruition. I think we were 87.5, and we're fractionally up on that for this year, 2023, as articulated by the prospective plantings report. But I just use last year just as one example, and you can look at many, many, many years, but that's obviously the most recent one. And you do see these changes. You do see last minute cropping shifts. You do see shifts in availability of inputs, which can dictate what actually goes in the ground. We saw some of that last year, where in some parts of the country farmers want to get corn in the ground, but delayed shipment, lack of availability at the time when you need to plant, those things all happen too. So I think there's a couple variables that are really worth watching over the coming weeks. Certainly, first and foremost, let's look at those corn and bean numbers and the geographic distribution of them. Where you see the biggest jumps year on year for both crops are up in the Dakotas. I forget the exact change for corn, but for soy, it was plus 850,000 acres, I believe. So pretty substantial increase there. But as we consider the weather and the snowpack across the northern plains into Minnesota, how long does that persist? Maybe we don't have a wet spring brought on by precipitation, but of course there's snowpack runoff and everything too, which could potentially delay field work on the corn side. And maybe if that gets delayed enough, you see some shift to beans. We've certainly seen this happen in other years. 2015 comes to mind for me. The expectation was that we'd have over 90 million acres of corn, and wet spring kept pushing back those corn planting dates, till you get past the crop insurance dates, and then it behooves you to plant beans. So we had more beans than expected that year. So certainly that piece overlaid with of course the precip and temperature and everything that actually happens day to day with the weather. We've been, I think, on a trend and pattern where we've seen more and more precipitation in the spring throughout the Midwest. We certainly saw this evidence in 2019 when we had a huge amount of prevent plant for both corn and beans, again, in the northern plains as well as in the Corn Belt. So even while the number, I think, is surprising, as we're still reconciling it from Friday, and then you've naturally seen the market response since then, where beans, were up for several days following a string of losses over the prior 12 trading sessions or so. And certainly when you have that price response to the acreage report, it does shift some of the calculus and economics on some of those marginal acres. But everything I've talked about thus far, I've talked about some weather things, I've talked about economics and price and everything, but this is, we've talked about this before. farmers are weighing so many things. It's not just about, penciling out your returns. It's about, I think also putting in pen what is going to be, best agronomically.
Sure.
Farmers want to balance that nitrogen cycle, the rotation. You need to, maintain a rotation as well for, disease and pest management. So these are all factors that come in as well, that if you're just looking at, the prices and margins and everything, it doesn't tell you everything. So that's one piece there. And then I'd say the other part, which is maybe less relevant than we would have thought of maybe a month or two ago, simply because I think a lot of this is already priced into the market, is will there be further degradation of the Argentine crop? So started the season close to 50 million tons. That's typically what Argentina would produce in a normal, non-La Nina year. And, in March, USDA issued another large cut, an 8 million metric ton cut, which is pretty staggering. You don't typically see that, particularly on the foreign balance sheets, but, taking it down from 41 million to 33 million metric tons. But you see local observers put that figure even lower, kind of in the mid 20s. So if we see additional degradation there, maybe there's additional call for soybean acres to come up between now and when farmers actually start planting them.
Yeah.
But I do think look at price levels now, nearby or near $15 a bushel. I think a lot of that expectation of a very, very small Argentine crop is already pretty much accounted for. And if we do see additional cuts, I don't think that's going to play as much of a role in any last minute margin decisions as the aforementioned weather and agronomy concerns.
Well, Mac, as well, I know the other piece of the March USDA reports was the quarterly stocks number, and looking ahead, we got a WASDE report in front of us for the month of April. So how do you foresee those playing into the April WASDE, and what impact could that potentially have on the soybean market?
Looking at the two major reports from Friday, and grain stocks, normally I spend a lot more of my focus on any March 31st, focused on the plantings report. Gives you, like you said, that first building block kind of line in the sand of, where things are, likely going to orient. Of course, knowing there's always changes, but for the grain stocks report for soy, for this release, that's actually the report I found more interesting on Friday, and that's because last year, for March 1st, we were looking at inventories of 1.9 billion bushels, a shade above that, and then closed out the year with a pretty tight inventory position. And now the March 1st inventories for beans down 13% relative to the prior year. So now we're looking at, I think, 1.69 billion bushels thereabout, which is, that's a large volume, but against the backdrop of how much we use, it sets us up, I think, for a pretty tight position as we go into the new marketing year. So just consider this: last 5 years, average utilization of soy, or maybe better stated as average change in inventory position from March 1st to September 1st, has been over 1.5 billion bushels. Now, that's not to say that that is going to be how much is used in the second half of this marketing year. Certainly with price levels, that has an interrelation with how much is demanded and how much is actually used. But if we're looking at anything close to that, 1.5 billion bushel utilization over the second half, then that means we're coming in with under 200 million bushels in carryout. And you look at the trade expectations for the April WASDE, and you've got a range on that. You've got a range of 170 million bushels to 225 million bushels, with most of the trade thinking it's going to be a reduction from the projected carryout as stated last month. So we'll likely see a drop in that, because I think that stocks position is very, very telling. And, with a tight inventory position that gets even tighter than where we were at the start of last year, I think that, sets up for, another strong year of pricing, at least early on in the season. Now, of course, we've still got a major price break between old crop and new crop. So when I say that it's a strong price environment predicated on tight inventories going into the new crop marketing year, it's still a grossly inverted market right now, where there's a pretty large gap between the close to $15 prices that we're seeing now and the close to $13 prices that we're seeing for deferred delivery at harvest time.
Well, Mac, all great thoughts and observations. Bottom line, any other final thoughts here that you're thinking of here when you look at this soy complex as a whole? You look at the market as we're getting into this critical time of year. Anything that farmers, producers need to keep in mind here the next couple of weeks ahead?
Well, let's break down some of that demand side stuff because we talked
Sure.
on the production side, and I've just talked through the that shift in inventory and what our second half utilization looks like.
Yeah.
Um, I think the other thing that's important to keep in mind is, okay, well, what's going on with crush? Now we've talked about forward-looking crush expansion and everything, and we can spend lots and lots of time with that because that goes in many different directions. But I think here and now we haven't seen crush running as hot the last couple months in the U.S. And some of that is okay. Well, now we finally have to employ some downtime. We've been running capacity so hot for so much of the last year and a half as crush margins have been really really strong, and now there's a need I think for downtime or at least a lower capacity utilization rate nearby. So what does that mean for the second half of the year? Does that mean that we're still going to be crushing at a pretty aggressive rate, or do we see a rebound for that? I think we'll still see strong crush overall, particularly as the market continues to call for more and more vegetable oil for renewable diesel and other products. Certainly, that segment of the energy market has been looking to secure more and more feedstocks. We're seeing lots of imports of used cooking oil to flow into that market. But of course, the more that we can see soybean oil play a critical role there, which it does and
Mhm.
will continue to. That's a reflection, I think, of the market calling for more soybean oil, which I think is going to mean maybe a little bit of a rebound crush over the back half of the year, and certainly sets us up for really aggressive crush expansion in the years to come. Based, of course, all on what the prevailing economics and break evens are.
Mhm.
It's like any farmer has to pencil that out, and that's definitely part of the equation for making cropping decisions. Again, the agronomy is paramount as well. Same thing holds for these processors and players further down in the value chain that are looking for expansion. Does it pencil out in the nearby? Does it pencil out in the long term? And these are open questions. I think that continue to live on the back of what that margin looks like on the crush level. And it's not what it was last year, but they're still overall pretty strong. So we'll see how it continues to run. I think the other
Definitely.
open question is, exports second half of the year. And of course,
Mhm.
we've gone past, our seasonal peak window. The world is all sourcing from Brazil right now. But of course, with the disruption in Argentine production, Argentina's having to source more beans from Brazil that otherwise I think would make it out onto the international market. So, does that possibly present additional opportunity for whole bean exports out of the U.S. Over the second half of the year? Yeah, potentially. Again, it's not our strong shipping season, but there's I think opportunities for some lift there. We've got a strong order bank for the second half of the year. You look at the export sales reports. So we're in a good overall demand position. You certainly see that reflected with the supply side tightness because that's a
Mhm.
function of how much is getting used. And I think we're setting up well for another strong year for the world of soy in marketing year 23-24.
I think one caveat as well, just to add on real quick, is the geopolitics and some of the issues with China and the US. How does that develop? Obviously, China, recently buying a lot of our soybeans, are they filling their reserves, et cetera? Like I know that's a caveat to this whole discussion as well that we don't know the answer to because we got to see that situation develop, Mac.
Well, I think just speaking for the soy side, earlier this week there was a U.S.-China roundtable as part of the U.S. Heartland and China relationship, where we had some senior leadership both on the farmer and staff side from the U.S. soy industry, working with U.S. government and also meeting with the Chinese delegation. So, at least from the industry side, there's still I think a clear recognition that this is a mutually reinforcing trade relationship, again, in the world of soy. China's our number one overseas buyer, and maintaining that relationship is critical. But just as any other business or enterprise or industry has to consider, we have to always be looking at diversified markets and diversified channels for soy. We've been embarking on that path, I think, for a long time, and it's manifested itself in many different ways. But looking, I think, both within our borders at where there are opportunities for additional soybean meal use, particularly as we have more meal coming on. Meal production coming online in the coming years. That's certainly one piece of it. How do we think about diversification through more and more meal-oriented markets moving forward? But it's also how do we think about novel uses and applications, and this is what our farmers are tasked with every single year when it comes to evaluating what their investments are going to be, what the next round of investments are going to be for advancing the U.S. soy industry. So, lots of dynamics here unfolding, and certainly, like the dynamics with China are multi-pronged and multifaceted. But I'd say between the buy side and the sell side here in the world of soy, that the recognition of I'd say that long-standing relationship is really critical. Last year, U.S. soy celebrated 40 years in China, but it took 13 years before we ever had a commercial sale of beans there. So it goes back a ways, and these things take time and patience, as does advancing market diversification. So it's all part of a longer term proposition. Yeah, nobody farms for one season. I like to say that a lot, but the checkoff also doesn't make investments for one season. We like to look a lot longer term than that.
Very, very true. Well, a lot of things for us to keep our eyes on. And of course, we'll stay close and stay in touch with you as we talk about the soybean markets and everything surrounding it. With that, Mac Marshall with the United Soybean Board. Thanks so much for the time, sir. Have a great one, and we'll talk to you again soon.
Always, Jesse. Thanks so much for having me. It's great to see you again.